All right, so now let us focus on some of the questions that I gave you for practice. And many of you said it's they are difficult, but they should never be difficult at all, because that's the standard of questions you're going to get in your assessment. All right, so that's exactly what you're going to be getting in your assessment. So, and yeah, it's a bit challenging. Like I said to you, assessment 2 is the most challenging of all, but you can still do very well there, right? All right, so let's start with this particular question, which we have here. All right, so we have this list of balances, or we could refer to it as a trial balance. All right, so this is a trial balance with so that's a trial balance, right? So this trial balance, it gives you a list of items on the debit and credit, and it is from these, right, that you're going to make adjustments. All right, and so that's the additional information which you need. So the additional information is the year-end adjustments which you need, all right, so that you can adjust these amounts, because these amounts are the amounts that have been recorded currently, but they do not take into account this information. So this information is going to be needed to do adjustments in these list of balances where applicable, not in each and every, but in some where it's going to be applicable, right? And then after having made the adjustments, then we can prepare the financial statements. So now the question wants us to show the profit or loss account as it would appear in the general ledger. All right, so as it would appear in the general ledger, right? So that's our first question. Then the second question requires us to show an extract of the profit or loss account, that portion for expenses only. But now this is part of the income statement, all right? Now we want to also show the current assets as they would appear on the statement of financial position. And we also want to show the effect of the adjustments A to D above on the basic accounting equation. So that's a lot of work, but I want you I gave you that work because I wanted you to practice all of that. It's very important. Now I want you to listen very carefully. I want you to take your own pen and paper and draw up the things, and you fill them up as we go, so that after that you should try to do that yourself, reattempt the question on your own to see if you can do that. All right, so you must take your pen and paper. So we remember that here we need profit and loss items, all right, as well as current assets. So if you come here, that's the importance of knowing remember we have 5 elements. So when we look at profit and loss, we're looking at income and expenditure. All right. And those items that fall under profit and loss are profit and loss, because we have remember we have the statement of profit and loss and other comprehensive income. So it's divided into 3 sections. All right. We have the trading account, the trading section, where we have our revenue, cost of sales, and gross profit. So that's the trading section. All right. So that's going to be the trading section. Then we have the profit and loss section. All right. So from the profit and loss section, we have gross profit, right, or gross loss from the trading section. It comes there from the trading section. Then we have other income, which we explained to you what that means. Then and the other expenses like your depreciation, insurance, so all the expenses. And also your finance costs will be here. All right. So sometimes they want you to do a distribution. All right, remember I don't teach only this module, right? I teach also at honors level, at CTA level. So the way of presentation differs, but sometimes they want you to show these expenses in groups of so you have to look at the information that is given. Sometimes they want you to show it in form of, like they say, distribution, right, administration, and other expenses. But at higher levels, we just refer to them as other expenses, and that's fine. So I think this is the category of all other expenses. So now, if you want, you can start by looking at what are you going to categorize as an asset, as a current asset. So trade receivables control is a current asset, so you want that. Inventory is a current asset, you want that. Bank is supposed to be a current asset, but if you look, it's on the credit side, so it's a current liability because that's a credit balance of the bank, right? That's bank overdraft, so that's a liability. That's a negative account, that's a negative balance, right? So this is a bank overdraft, it's a negative bank balance, it's a credit balance. So all those things refer to the concept that bank is going to be a current liability. So if our bank balance is going to be a debit or favorable, also this will also be unfavorable. Or if it is favorable, then or if it is positive, then it's going to be a current asset. So please do pay attention here. That's why they did put it there and put a credit entry. So those are our current assets. Now our trade payables control is not. Allowance for credit losses is going to affect trade receivables control. So we're going to pay attention to this for current assets, right? Our rent income is income, so it's going to be part of the profit or loss. But we pay attention to a case where there is accrued income. Let's say there is some rent which hasn't been received yet. That becomes accrued income, which is a current asset. All right. So, and those things should be clear. Wages and salaries is an expense. Right, we want it. Electricity is an expense. We want it. Telephone expenses is an expense. Insurance is an expense. Credit losses is an expense. Now, these are the things that we're looking to, so that we're going to do an adjustment on that. And after doing the adjustment, then we're going to ask ourselves, how does this adjustment affect our desired amounts? So let us start with the first one. All right, so no, the first adjustment is here, right? A tenant, right, took occupation. So the year end is 30 September 2002. So which means that it started on the 1st of October 2001, right? Then the year ends 30 September the following year. So that's our financial year. So we are going to report things that fall within this particular financial year, the income and expenditure for this particular year. All right, so that's what we're going to do. All right, so a tenant took occupation on the 1st of August 2001. Remember, our year started here on 1 October, right, 2001. So this tenant took occupation on the 1st of August. So that is last year. All right, they started last year already. Right. Since then, the tenant has only paid rent for 11 months from the start of the rental date. Right, so that's very interesting. Right, that's actually a very interesting question, because we need to now to have a look at how much rent was actually paid. So the rent that we have recorded is 45,000. But remember, this 45,000 has been recorded this year. All right. So this is the 45,000 recorded this current year. But remember, this guy started paying rent last year. So there's a rent for last year, which was paid and recorded last year. So he paid rent for August last year, September, last year. So those 2 months last year. All right. So this guy paid rent for 2 months in the previous financial year, because that was August and September. Then once it becomes October, it becomes this current year. So if he paid for 11 months from the start of the rental date, then he paid rent for 2 months last year plus 9 months this year, which makes 11 months from the start of the rental date. So we're not interested in these 2 months because they are for last year. Our reporting is from 1 October to 30 September. So that only 9 months. So this guy paid rent 9 months, and that rent is equal to 45,000 for 9 months. All right. So obviously it means that the rent per month was 45,000. All right, over what? Over 9. So which means that monthly rent is 5,000. So the information we had above helped us to determine the monthly rental. All right. So what I'm going to do is that I'm going to open pages where we're gonna write all this. All right. So we remember that we want to prepare our profit and loss account in the general ledger. So in the general ledger, it will have the name profit or loss account. All right. And expenses will be this side, because remember, expenses are on the debit, right? And income will be on this side. All right. So obviously we're going to have rent income. There's no question, but we just don't have a figure yet. And if you look at the information that we have, then we're going to have wages and salaries. All right. We're going to have wages and salaries, water and electricity. Right. What else do we have? Telephone, insurance, credit losses. So we're gonna have telephone, all right, insurance, all right, credit losses. So that's for sure. That's what we're gonna be having, right? Then let us do this again. Let us open another page for current assets in the statement of financial position. So whatever, you start with the name of the entity. Sometimes they give you, so let me just say XYZ Limited. Then this is going to be the statement of financial position as at. So the statement of financial position is not for the year ended, but as at, on a particular date, as at. So is that 30 September, right? All right, 2002. Then we're going to start with assets. Then under the assets section, we're going to have non-current assets. All right. So under non-current assets, we have your property, plant, and equipment, and investments or fixed deposit. So there could be investments here or fixed deposit. All right. That is to say, if that is information given. All right. But in this particular case, we are not interested in non-current assets. So we're gonna have just a figure, an amount, and a category for assets there, and then we come to current assets because that's what we want to report. So under our current assets, all right. All right, so I'm going to generalize here. So we start with our inventory, and remember, it's reported as inventories. All right, so you don't have to choose one. You don't have to say inventory with a Y. It's inventories because it includes trading inventory and other consumables. All right, so we're gonna put a figure there once we do our calculations, once we determine if there is need for any adjustments. So then we will have trade and other receivables. So we're just not going to have trade receivables, but when reporting in the statement of financial position, it's trade and other receivables, right? Let's say we have prepayments. All right. If we do have, I'm just generalizing, and then we can have cash and cash equivalents. But because our bank is what is it? Is negative balance. Is bank overdraft. We won't have any here unless if there is petty cash there, which I didn't see. So your cash and cash equivalents will include your bank plus petty cash plus float, any float that we have, cash float, right? So let us do this now. So let us start with the adjustments. So you see there that there is accrued income. All right, accrued income is a current asset. So it's going to be reported as under trade and other receivables. All right. So it's going to be reported as trade and other receivables. All right. So we have determined that this current year, 9 months has been paid. So 3 months is outstanding. All right. And the rent for per month is 5,000. So we have 5,000, right? So we have 15,000 accrued income. So this adjustment is accrued income. It's going to increase our income, all right? Because now our rent has to be increased by 15,000. But this is accrued income. We haven't received it yet. So we're going to increase trade and other receivables. So the adjustment is, right, if you want to do a journal entries for the adjustment, this is the adjusting journal entry. You're going to say accrued income, right? So it's going to be 15,000, right? And you're going to say rent income or rental income. I don't know, because sometimes you guys have to type in, and if you say rent income, they want it rental, so they're going to say it's wrong, right? So which is very unfair. So then your rent increases by 15,000 there, right? So as you can see, the effect on the basic accounting equation on this particular adjustment is that your assets are going to increase. Your rent income, your equity is going to increase. All right. Right. So now we have our rent income. So if you come here, our rent, then we're going to say plus 15. So it becomes 60,000. So if we come here, our rent income becomes 60,000. That's in the profit or loss, right? And we still need to see if there are other adjustments before we adjust our trade and other receivables. So on 30 September, now what is 30 September? That's right at the end of the year. We received a telephone account of 6,750, which was overdue for 2 months and still not paid. So which means that because remember we only record when we receive. So on the 30th of September, it's not yet recorded. So this is an accrued expense. So if you want to do an adjustment there, then it's going to be telephone expense is going to increase, right, by 6,750. Then accrued expenses is going to increase by 6,750. So this accrued expense is going to be recorded as trade and other payables, not receivables, because we ought to pay. So trade payables is the suppliers that we should pay, plus other accrued expenses. It becomes trade and other payables. So as you can see, if this adjustment here, all right, is going to reduce our equity because telephone is an expense. So an expense has increased, that reduces our profit, that reduces our equity. Accrued expense is a current liability, so our liabilities increase. So if you come to your telephone, you're going to adjust your telephone by telephone expense by 6,750. And if you combine those two, right, remember you can only put in an entry once you have done all the adjustments, because sometimes a single amount like this telephone expense could have another adjustment down there. So you don't start by adding these two and putting them there. But of course, because you guys are dragging and dropping, then it's easier. If it was writing, then it would be very dated, because you would be what is that thing called? You'll be canceling the things you wrote. So 43750, all right, plus 6750. So the new telephone expenses is 50,500. So I'm gonna put here, and that telephone expense is 50,500. So this is definitely not difficult, all right? This is not difficult at all, because it makes sense, right? That someone owes you, they have to pay you the difference. You owe somebody, you have to pay. So the total that you should have paid for the year for telephone for this current year is this amount. The total rent income that you should have received this year is 60. Whether you received it or not is not the point of the profit or loss. The profit or loss is about what is supposed to have been paid, what is supposed to have been received. Whether paid, whether received, it's something else. Right? So we have done this adjustment. Then the next adjustment says, Arch traders changed insurance providers to Lee insurers. This is on 1 May. Remember, 1 May 2002 is this current year. An EFT payment of 30,000 was made to Lee insurers. This amount was paid for 1 May to 31 December. Right? So here's something that you might find interesting. Right? So there's an amount of 30,000 that was paid. And remember, our year ends on 30 September. But this payment covers beyond this current year, because it covers up to 31 December. So how many months does it cover beyond the current year? Because we want to stop at 30 September. But there are some months that don't belong to this current year for which payment has been made. And those amounts, right, cannot be an expense this current year because they apply to insurance for those months. So it's an insurance expense for those months. So for October, November, and December. So we have 3 months of prepayment. All right. I remember when this payment was made, it was recorded under insurance expense. So our insurance expense is too much by 3 months insurance, which falls outside this current year. So this was paid for 1 May to 31 December. So we're going to count and say, remember, this is the 1st of May. So the month of May is going to be included. If it was the 31st of May, then we would start counting from June. All right, but this is the 1st. So we're going to say the month of May, June, July, August, September, October, November, December. So if you look, I have, so it's 8 months there, right, in total. So which means that per month, it was 30,000. Right? So per month, it was 30,000 divided by 8. So it was 3,750 per month. So, but we know that for 3 months, it should not be included, all right, because it's for the following year. Remember, this 30,000 was recorded already, right? Because the moment payment is made, we have to record the payment, right? But the adjustment is done later as to which years does this actually apply to. So 3,750 for those 3 months, right? Multiplied by 3. So that's going to be 11,250, which is for the next year. So we have to reduce the expense. So we have an insurance expense there, and we have to reduce it by 11,250, because that 11,250 is not an expense for the current year. It's a prepayment. So that adjusting journal entry, right, is going to be that's just in journal entry. Where is it? All right, is it here? Oh yeah, it's here. It's here that we are doing those journal entries. So that's just in journal entry. We're gonna have prepaid insurance or prepayments, or it could be prepaid insurance or whatever it is that you will get in your on the day. So it's going to be 11,250, right? And then now we're gonna credit insurance, because insurance is an expense, and to reduce an expense already recorded, we need to credit. So we're gonna credit the expense. This is the adjusting journal entry, right? So you see, this is a current asset, so your assets are gonna increase. This is a reduction of an insurance expense, so your equity is gonna increase because an expense has been reduced. Right, so by that adjustment. So if you come to your insurance, right, you're gonna have it as Insurance expenses 65 minus 11,250. All right. So you have 65,000 less 11250. Then you have 53750. So that's going to be your insurance there. So it's going to be 53750. Brilliant. Then we go to credit losses. So credit losses, the allowance for credit losses, all right, should be increased to 5,000. All right. So a credit losses is a credit balance. An allowance for credit losses is a credit balance. So to increase something with a credit balance, you have to credit it with the amount, the difference, right? So we already have some allowance for credit losses already recorded by us. So this is for last year, it was 4,000. So it has to be increased to 5,000. So the current balance is 4,000, and it has to be increased to 5,000. This is different from the statement that would say it has to be increased by a certain amount. It has to be increased to. So currently we are 4,000. We're at 4,000. It has to be increased to 5,000. So we just need to add an additional 1,000. Right? In other words, it has to be increased by 1,000. That's the difference between those two expressions. Increased to, increased by. Right? So the journal entry for an increase in allowance is going to be your credit losses here, right? 1,000, right? Then your allowance for credit losses is 1,000, right? So if you look at this, all right. So what this means is your expenses have increased by 1,000. Credit losses is an expense. It has increased by 1,000. And that means that equity has gone down. All right. And our allowance, this allowance here, is affecting our current assets. It's a reduction in the value of current assets. It's a reduction in the value of trade receivables. All right. Because there's been an increase in that amount by which we should reduce. So we should reduce our trade receivables by an additional 1,000. So which means that our assets are also going to be negative. All right. So what this means is our credit losses here is going to be equal to plus an additional 1,000. So now that becomes 3,500. So we come here, I'm gonna write 3,500. Brilliant. So whatever. Now this what is this? Wages and salaries. It's wages and salaries. Water and electricity. They didn't receive any adjustment. So I'm just gonna take them as they are, 90 and 72. All right. So I'm gonna put in the 90,000 and 72,000. Right. So depending on what the question wants, but all right. So that's what we have. So if we're going to close this, right, then it's going to be closed off to the capital account. All right. So end balancing figure here. Remember, in this case, we don't have. Normally, your profit and loss will also have gross profit here. If there was a gross profit, it would be here. If it was a gross loss, it would be on this side. All right. And the smaller side provides the balancing. So in this case, the smaller side is the credit. So we have capital would be here to provide the balancing figure, and then we can balance the account. All right. We have discussed this balancing of accounts, so that's very basic. So that's your profit and loss account. So you guys were saying that you don't even know where to start, but come on now, that is very easy. That's straightforward. So you should expect something like this in your assessment. If you open your assessment too, you should expect something like this, where you do adjustments, you drag and drop, you do adjustments. Some of these questions will not have any adjustments. Like for example, here, there was no adjustment. There was no adjustment. But in this 4, there were adjustments. Right. right? So now if you take these four, if you take this, this was a profit and loss account in the general ledger. I want you to distinguish that from a extract of the profit and loss in the financial statements. So under that, you will have something like, all right, other income. So there's a column for other income. There's a row rather. Then you have rental income. That's how much? We have it as 60,000, right? Rental income 60,000. Right. So if that's the only thing, you could have other incomes here like interest income, commission received, right? Credit losses recovered, right? That is if the question has those things. Then you have your total for other income being equal to whatever you get there. Then you come now to expenses. You, I think they are referred to as distribution, right? Admin and other expenses, right? Sometimes what happens that sometimes, because now here there might be gross profit here, because that's your profit and loss starts from the gross profit, if there was a gross profit. So sometimes what they want, the examiners want you to add these two amounts and refer to them as gross income here, somewhere here. You combine the gross profit plus other income to get gross income. Sometimes so you might see that there are slots for something that you have to drag here and drop there, and you wonder what it should be. So it's normally gross income. Sometimes it's not there because remember, this is not a prescription. It's going to be presented differently as you go on and on. Then you come to expenses. It's distribution, admin, and other expenses. All right. Right, so you're gonna have your telephone. Normally they want you to present them in the order, so it's gonna be wages and salaries. I forget the amount, so I wouldn't worry about the actual amount. Water and electricity, right? I think that's 72, so I think this one was 90, right? But whatever the amount is, then I have telephone expenses. Whatever the amount we're gonna be taking is the adjusted amount, right, as given above. Right. Then we have insurance. So the adjusted amount above. Then we have credit losses. The adjusted amount above. All right. Right. So if you add up that, then you're gonna get your administration and whatever, distribution, admin, and other expenses. And if you're gonna remember, we've taught you these things. So this is a repetition, right? Then here you have your finance costs. All right. Then you could have said, let's say, interest on mortgage, if there is a mortgage, or interest on bank loan, interest on bank loan. All right, because those are two different amounts. So you have your interest paid, your interest there. Right, that's going to be your, that is going to be your finance costs. Okay, so you present it like that, and that's very simple. It's not really difficult, is it? Right, then now we're done with this. Right, then we come to now constructing the statement of financial position. All right, and we wanted the current assets. So our current assets, your inventories, not just inventory, but inventories. So we don't have any other inventory here except this. So I'm gonna come and put 250,000. All right. So my inventories is gonna be 250,000. Then my trade and other receivables. Right. So I started out at with trade receivables 225, right? 225,000. Remember that I have to subtract a new allowance of 5,000. We always subtract the total of the allowance, not the movement. 5,000, right? So that's the only adjustment I have, right? But we also have that accrued income. Is it 15,000, right? Yeah, that accrued income, rental income, because now it's trade and other receivables. So I'm going to say this adjustment for trade receivables plus an addition of accrued income. Right, so I don't know what you get. Let me not calculate, because calculating is not what you need, right? You don't need help with addition and subtraction, so I won't then waste your time. You can calculate here. And so that's going to be your, not trade receivables, but trade and other receivables. That's what you got. Then your prepayment is going to be here, 11,250. And remember, we don't have cash and cash equivalent, so we're going to close off like that. Then that's our current assets. And you guys were saying that's difficult, but come on, that's not even difficult. That's absolutely not difficult. So I hope you can now, after if you've been following, you have written down everything, you can all right, stop the recording, go to the original question, or if you have this question on YouTube, because I'm gonna also post it there, and you guys don't have the original copy, all right, this is just for my class, right? So you can just write down here all those things that you see, then do the adjustments here. So you can write down the question, then I'll put it aside and see if you can do this, if you can do this. All right, so the question wanted us to show expenses only, but I also showed you everything. Then I showed you this, then I did that as well. Right, so basically that's how we do this adjustment for profit or loss. So that's quite a lot, because we didn't cover just one, but we covered a lot as well. All right, so if you would like to join our classes, you can, or if you would like to join our groups, you can always ask to join our free Telegram groups. You can ask these, the admins, the reception, they will guide you to our groups for FAC1502. And if you would like to join class, then once you're in the Telegram group, you can talk to the tutors there to say, I would like to join the paid classes. All right. We wish you the very best in your preparations.